Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So the quarter is behind us. And yes, I'm sure you heard all day, everyone debating whether the market is rigged. Okay, I'm in the camp that yes, high frequency traders are out there and they're always going to be out there in some form. And can they make money off of other high frequency traders or other professionals? Probably. But as far as not investing in the stock market because they exist, I don't think that's the case, because right now S&P is about 1.5% off all-time highs, and they've existed for a while, and the market eventually gets where it's supposed to go. The same way with stocks. If for some reason you pay a penny or 2 pennies more or whatever it is, ultimately real volume is going to get to the destination of the price that buyers equal sellers, not just the individuals back and forth. So I feel that was a big headline. The media had a great time debating it all day long. Ultimately, the stock market over time, if you have a system, will or could, benefit you. Depends on your time frame, which we talk about. So, time frame. Let's just go back to that. Market closed strong today. A lot of people say it's window dressing. Who knows? All we know is that the S&P held upper support last week, and today it didn't sell down at the end of the day. Maybe it is because the end of the quarter and new funds coming. All in all, let's just start. I just want to start rattling through stuff and go through it. So let's just do it. Here's the spiders. Here is the chart. Last week, the spiders did try and test this lower support, and it bounced off. Has it broken out yet? No. But is it at the top of the range, back above the moving averages? Yes. So ultimately, as far as the trends that we follow here, the macro trend is intact. Or this is actually your intermediate trend. Remember this accelerated trend that broke to start the year, that held? This is where we are right now. No sweat there. And it has been a bit of a head scratcher because the spiders don't go down, or the SPX doesn't go down. But you had a lot of weakness in some of the hyper growth sectors, if you come back to me, that everyone thought would push, because usually the strongest stocks push the first month to 2 months, not go and then diverge and then sell off. I know for me, my best, I'd say my strategy or my process, I like to be involved in 7, 8, 9, 10, 12 stocks as long as the market feels good, as long as they're above the 8 and 21 day, and that's my strength. So when we broke all those moving averages, I feel like I got out of the way. I've tried a few of them with some paper cuts. Yes, could I have done better shorting them? It's just something that I'm not that good at, and so I did get out of the way and get away from a lot of the damage, but I guess you could have made more money from the short side. And now the question is, some people were saying to me, those high beta names that have been so weak, maybe they didn't want them on the books at the end of the quarter. Should we look for a reversal pattern in the next few sessions, and maybe this time it sticks because it's a new quarter and money could rotate? Yes, and that's what we typically do. So anyway, you go back to the charts here. Here is the S&P looking like it's not going to knock on the door, to new highs, and then you start looking at other places like the IBB, which broke right here. Okay, remember this more intermediate trend? That was a big break after making a high, lower high, another lower high. Where are we now? It actually held up today. So you almost could draw this downtrend or this descending channel here, and at some point, if it goes sideways, maybe there's a trade for it to break above this lower pivot. I'm sure a lot of stocks within this group, if this closed green, wound up having a decent day. I guess not Celgene. Celgene closed near the pivot low. So that's something that you need to trade against. Maybe get a red dog reversal, or maybe it just breaks below and doesn't come back. Kind of like what it did here. You didn't know if you were going to get a red dog reversal after this move down, and it turned out to be a move down that didn't get reclaimed. And RDR happens when you break below a level. Everyone that plays versus gets stopped out, and then it comes back above, and that creates a little bit of a washout, and then perhaps you get a bounce above, that trend line. Let's see what Gill do, because I'm interested to see. Okay, this one, 2 broken stock. At least if you draw your lines this way, and first green bar actually closed green. Here, this one looks, I guess, a little healthier than the other. You have this lower pivot that it's not near, and it bounced. So what you got to do with these is almost draw these descending channels now that typically take a lot more time than this to work out, but if it were to trade and close above it, here's your pivot to trade against. But you don't know yet. All you know is that you've had corrective activity. You could have used this as a stop. You could have used that as a stop. Here, people were trading against this pivot, resolved to the downside. This one looked a little bit better, resolved to the downside, and now maybe it tries again. But ultimately, it's been hard. And, it's been a lot harder in some of the momentum names. Today I was talking to Mark, and I'm like, wow, Netflix started up $5, wound up down 7. Amazon was up 6. Went negative. Google looked really strong, red on the day. The composure is just not there. It starts off strong, and if you buy something because, oh, it was strong 10 minutes ago, and you cost average in, and you've done that the past week, you could get blown out of the water. So that's why I've been saying maybe you buy a level versus a level at the low, or if you're looking to short, and I know it's been hard to short because these things have come down so much, let them put in a 15 to 30 minute high, short versus that high so you have a stop, and then see if the H pattern develops, which is what's been paying people in these high beta names. Because if you go to them and you look at Google, still not looking so healthy. This was the 8 and the 21 day that gave way. Here is when this little flag pattern broke. This is when this intermediate trend that's been in since 2 quarters ago, gave way, and now it opened up, traded into the pivot resistance and failed, and it looks like a bear flag here, big move lower. So it makes it hard to short when you're so far, it's down 100 points from when it broke the 8 and 21 day, which you could have saved yourself some pain if you did get out there or there. So now the question is it too oversold to continue lower? Who knows? So that's why you use these lower pivots. And if you said, oh, it was up this morning and you started buying it, after it pulled back and you just kept buying it, that's how you go out of business if you can't handle it. So anyway, here's your lower pivot. Here is, tomorrow you'll figure out 11, 12, and then this and see what happens. Netflix did kind of the same, where just it hasn't found a friend, and if you bought it at any strength, you're definitely frustrated. Today I did not trade Netflix because too many times I've also tried to buy it after a move, and it winds up, hurting. So here was the trend that broke. You draw the trend from the gap up, signal number 1 to get out, 821 day, break into signal number 2, and then bigger support broke. And now this has just been dribbling lower, and every one of these tails was up $3, $4. And I guess if you could short that, congratulations, you're better at doing that than me. I'm just happy that I'm not like, oh, this is the time it's going to go, and then it doesn't go. So I guess if you draw a little bit more of a trend here, I guess using this, and it's starting to break more intermediate. This was accelerated, this was another, and now here we are. So for Netflix, we'll see what happens with the new quarter. Maybe they wanted to throw it off the books because it didn't perform well. Who knows? But at this point, you have this descending channel, and it can continue. Who knows how long it goes? So you just draw it and figure out when it changes. Maybe tomorrow you get a red dog reversal through 349 and back. Maybe not. That's how I would trade this. Now it's below the 150 day. Overall, signal sell, downside follow through, and then now it's been a choppy mess with take your trades both ways. Amazon, that was gross today too. Amazon came out with the earnings, okay, and they didn't give it a pass for the first time where it opened lower and just came back. That was signal number 1. I remember trading it here. Okay, remember this nice little trade to fill the gap? Well, that was a trade. Then you had this ascending channel where as long as it followed it, you stayed with it. And then what happened? Resolved to the downside right there, and then continued lower. And now, today again, it was up and then failed. That's why it's making it real tricky. But ultimately now, it's kind of hovering below what used to be decent support, and it hasn't given you a signal that it's out of the woods, and now it's below all the moving averages and weaker. So this is your pivot. If it were to trade below 344, come back above, maybe you have a tactical buy. But again, these are just tactical, quick buys, if that. And then you have this. Then at some point, who knows when, because nobody knows, there will be a time when you can change the composure here on it. And right now, it just hasn't happened. Facebook, last one I'll put, the same type of thing. This stock we've gone over many different times. This was, you look at it now, you're like, oh my goodness, how could I have not seen this head and shoulders pattern, which we posted, and a lot of people made some money with from the short side. You had two things work here. You had this same thing, a gap up, trend changed right here or broke below it, stayed below it, head and shoulders top, met the measured move. We had a decent tradable day and a half move there, and now it just looks like the rest of them. It's above Thursday's low with some inside bars, but if you bought any strength on Friday or today, you got hurt. And that's what momentum guys like, buying momentum, buy high, sell higher. Not the case, hasn't been the case for a while here. Hopefully you stop doing it. I'm trying to stop doing it, and I'm a little less frustrated because of that. So, can you short this? If it happens to trade below this in the next session or so, I guess so. And then you have this. If it were to get another inside bar and then trade above this, maybe you get a reflex move to retest this area, kind of like what happened when it broke here. But all in all, micro trades, and if you're in it long term, it's it's still a big winner, big. But these things all trade on different trends, and this was the gap up from quarters ago, and we're getting closer to testing that. If we get closer to this, maybe that'll be another area if this pivot gives way. But right now it's getting tight, and we'll see if another trade develops. LinkedIn also, that's been weaker. Gave you, it's been, look at this trend to the downside. It's boom, this was one, and then it accelerated again, and we've been trying to get these little micro trades, and that's all they've been. Decent reversal on Thursday, a little bit of follow through, then today, boom, reverse right back. So now looks like a lot of the same in this mess. So until that changes, something blaring, you got to just take your trades both ways, short strength, buy maybe a day like this, and give it not a lot of time and not a lot of space. Tesla also. Tesla actually, at least, went from red to, or green to red, and then gave you a little bit more downside. So for those who wanted to look for a short or been working on it, you still have this trend line not being tested, more of an accelerated one, opened up, traded below, actually didn't even get there, and then still having some trouble. Lost the moving averages. This was one sell setup right here. This was another one when it broke this 227, and now it's just continuing. And if you look where Tesla came from, it's corrected, but still it could have a little bit more ways to go. I guess this would be another area, and the moving average is down here. So it's been one of those trades where I even tried it today, and I tried buying weakness and it didn't work. I guess I should have been shorting it. But we'll see what happens as this lower pivot gets tested. Some other things that traded better. The casinos, we talked about it last Thursday, had that hammer bottom. They actually did not sell off as bad. But this is, this at least shows you that this pattern could work with more than a day and a half. Here was your red dog reversal hammer bottom. Day 2 gave you day 3 before coming off the highs. To me, I would have, took some off here on day 3. Let this see if it goes sideways and you see some commitment to this, and maybe it gets a little bit better. LVS also, nice 3-day move off of a hammer bottom. So this is like a good example of a descending channel that took a lot of time to go down, tried it here, 3 days failed. This one a little bit more, I guess, stretched to then, boom, 3-day move, and now see if it hovers sideways for commitment, and then maybe there's a more tradable, defined area. But this was your reflex move, and if you stayed with it for 3 days, good job. Same thing for MGM. 3-day move, hammer bottom, little day and a half, and then continuation. So. Now, I'm trying to point some things out on what we've been looking at and how we've been, trying to tactically trade them. You look at the XLE, that's been a strong sector. There's a lot of stocks in this group breaking out. Talked about this in the morning call. The ags look interesting, right? The MU. It's been a long time since they actually started to really get going, and some are pointing out like a reverse head and shoulders. It's coming into resistance here. You're seeing some interest. Maybe that's the case. I know I bought a little Mosaic today. Thinking it closed pretty well. There's a gap here, so perhaps it tries to, fill some of that the same way POT did. POT, we started really focusing on it here when it had this nice move, and then kind of lost a little focus as it's been trending up now above the 8 and the 21 day, filling that gap. What's CF doing? CF, still, I guess, providing leadership near the highs here, not really flexing its muscles, and these are tough to trade, but I'm just trying to find things. Microsoft was a really nice trade today. closed off the highs, but this gave you like a momentum move. It almost felt as if it was like a high beta name. Traded through this 40.99 and went right to 40.20 and went as high as 40.50 before coming off a little bit. So this still acts, well. This was a nice breakout here, another little move and then a retest and boom. I'm just worried, or not really worried, but I want to see what happens. These were a strong group, these mega caps, and now that the quarter's over, I want to see if the vested interest leaves it. Intel also, it's been moving well since breaking above this 25, but still it's not a barn burner, but it's something to do, something where I guess where money's been sort of parked. And IBM, had a big move, retested, coming up. And that's really it, guys. At this point, it's been a little tough. If you've been shorting indices because of the weakness in growth, hasn't worked. If you've been shorting rallies in the high beta names, congratulations. It's been your market for a month. It hasn't been that market for the last few years. If you noticed it and stopped buying them at least, I think that's half the battle, because you are paid pretty handsomely to buy the dips and play the breakouts in those names for the past year and a half. And I don't even know if it's over. It's just the upper froth has been taken out, and we'll see what happens quarter to quarter. But at least if you sold the 8 and 21 day, maybe we'll see some kind of reversal pattern that sticks a little bit more. Then we'll get that descending channel to see if it could break above and hold above to start a new trend, because right now that trend has been to the downside. Bios, first decent day, see if that builds. The banks have been somewhat lethargic, hanging around but not leading. You have the S&P close to highs, and this is the XLFs, still above the moving averages and a little lethargic here, but hanging around, looks okay. And that's basically it. Tomorrow is Tuesday, another day. I know you're going to look into your own trading for the first quarter. You'll see how you did. What you should do is you should look at your, overall report, see the list of stocks you traded, see which stocks you made the most money in, which stocks you lost money in, whether you made money long, short, and really analyze what you've been doing. So this way you know what's been working, what's not been working, so you could change what's not been working and build on what's been working. And also, what's been working for the first quarter might not be working for the second quarter, so you have to have that in the back of your head. And this is what traders do. You evolve, you change, you keep moving your feet, you keep having some type of positive attitude, because if you get too frustrated when things do clear up and your style gets a little bit more conducive, you might just be a shell of yourself, and you don't want that to happen. I know a lot of guys were playing this pran, including me, and look at this move. Boom. Okay, I had options on because it did look as if it was set up for something. If it was positive, it would have been up $6, $7. Data wasn't good, down a heck of a lot more. So my options are a zero. But whenever I go into some kind of event, the way I handle it is I like it calculated. I take options, same way I do for earnings. So for this one, if you come back to me, in an event, I take options. So risk is premium paid. If you're going to hold equity in a small biotech, you better know what's going on there as far as when data is going to be released, when things are on the report, because then you don't get side blasted. I heard some people say, "Oh, I didn't know that stuff was coming out on this stock. I was just holding it." Then, you know what? You didn't do your homework. But again, one of my rules is into an event, I like to do puts or calls. Into earnings, puts or calls, because you don't know exactly what's going to happen. If you did know, you can go to jail, because that's insider trading. No one actually knows. You could think you have an idea and a good feeling about it, and you could look at past trends, and you could look at whatever it is you look at, but truly, it's a coin flip. As traders, we like edge. We like to know our risk. So when you don't have an edge, but you want to be involved, use options, because risk is premium paid. Tomorrow starts a new quarter. I hope everyone goes home, have some fun, I don't know, spend some time with your wife, your dog, your kid, your son, playing sports, blow off some steam, and start fresh. There are 3 more quarters. So leave this quarter behind you, and if you did well and you outperformed and you rotated around and you stuck with what's working and you got rid of high beta and you went into and you didn't short the S&P and you were buying the low end of the range, selling the high end of the range, then you know what, you did well, and celebrate a little bit. But don't let those highs get too high. Same ways you can't get the lows too low. Even keel. Now, if you had a great quarter, don't spend that amount of money thinking you're going to have a great quarter the second quarter. Spend what you could handle and keep some in the bank for a rainy day. So this way, if you didn't have a good quarter like this one, you had a great fourth quarter last year, you're not that stressed that you need to overdo it in order to cover your nut. Scott Rella, T3 Live. The recap's here tomorrow morning at the call. Have a good night.